All right, let's talk about how to start investing in 2026. If you're a beginner and you're looking at all the economic craziness out there, you are absolutely in the right place. We're about to break down a really powerful blueprint for this year, one that's designed to protect your savings and set you up for real growth using gold, silver, and crypto. Let's dive right in. So, here's what we're going to cover. First, we'll get real about the new economic reality we're all facing. Then, we'll introduce a solution called the Sovereign Blueprint and break down its three main parts: gold, silver, and this idea of digital scarcity. And we'll wrap it all up with a simple action plan you can actually start using today. So, why are we even having this conversation? What's the big rush? Well, it's because the old rules for saving and investing, they're changing, and they're changing fast. The whole financial world of 2026 is just different. What used to be a safe bet just isn't anymore. You know, this quote right here, it just nails it. We're in this really tricky, delicate phase across the globe. The economy is slowing down, but at the same time, the cost of everything keeps going up and up. And that combination, it means the cash you worked so hard to save is losing its buying power every single day. That's the core risk we have to tackle. Honestly, you can think of it like a perfect storm brewing right over your savings account. You've got governments printing money like crazy, which just fuels inflation. That inflation then puts a huge squeeze on traditional safe things like bonds. Throw in all the global tensions and a slowing economy, and you've got a recipe where cash is losing value and the old school investments just can't keep up. But hey, it is not all doom and gloom, not at all. There is a clear, structured way to handle this. So let's get into the solution that our source material lays out. It's called the Sovereign Blueprint. The whole idea behind this is actually pretty simple, but it's incredibly powerful. It's all about balance. You're combining the time-tested, rock-solid stability of physical assets, we're talking precious metals, with the insane growth potential of these new digitally scarce assets. It's about protecting what you have while also making sure you're in a position to grow. Okay, so let's break this blueprint down piece by piece, starting with the bedrock, the absolute foundation of this whole strategy: gold. And wow, what a foundation it's been. As of January 2026, gold didn't just break its all-time record. It completely smashed it, flying past $4,600 an ounce. And get this, that was after rallying a mind-blowing 17% in the first month of the year. So yeah, this is not your grandpa's slow and steady gold anymore. Here's the most important way to think about gold. It's a psychological anchor. When the stock market gets all chaotic and crazy, what do people do? They flock to gold. It's the ultimate insurance policy. It's become such a reliable fear gauge that even the world's central banks are buying it up in record amounts to protect themselves. Okay, so if gold is your shield, your defense, then our second pillar, that's your sword. Let's talk about silver and the incredible power it has in the 2026 economy. Now, as historic as gold's run has been, silver has actually been outperforming it here in early 2026. It's climbed over 16% to break past $84 an ounce. This thing isn't just a shiny metal, it's a serious growth engine. And this is exactly why. Silver is an industrial powerhouse. For 5 years running, we've used way more silver than we've actually mined, which has created this massive supply shortage. Why? Because you literally can't build things like electric vehicles and solar panels without it. So it has that safe haven appeal, plus this huge growing industrial demand. So you see how these two work together, right? It's a perfect partnership. Gold is your defensive shield, that fear gauge for your portfolio. At the same time, silver is the offensive weapon, the growth engine that's capitalizing on all this industrial demand. For a truly tough portfolio, you really need both. And that brings us to the third and final pillar. This is the one that brings the whole strategy into the 21st century. Let's talk about cryptocurrency, or as we'll call it, digital scarcity. So Bitcoin is hanging out around $93,000 in 2026, but this is a completely different ballgame from what we've seen before. This isn't just a bunch of speculating anymore. No, this is a whole new cycle, and it's being driven by massive amounts of money from institutions pouring in through things like the new ETFs. The big money is finally officially here. You know, the easiest way to get your head around this pillar is with these two metaphors. Think of Bitcoin, with its fixed supply that can never be changed, as digital gold. It's a modern way to protect yourself from inflation. And then you have Ethereum, which is like digital oil. It's the fuel that actually powers this whole new decentralized economy of apps and finance. Okay, we've covered the why and the what. Now let's get to the most important part, the how. It's time to build your action plan for 2026. And that's the million-dollar question, isn't it? It sounds like a lot to juggle, but the blueprint actually gives us a really clear, simple starting point, especially for beginners. So here it is, the recommended starting mix. 40% in gold for that rock-solid stability, 30% in silver for that industrial growth potential, 20% split between Bitcoin and Ethereum for that massive upside exposure, and this last part is crucial, 10% in cash or stablecoins. Think of that as your dry powder, the cash you have ready to go so you can buy the dips when the markets get a little shaky. And getting started is way simpler than you probably think. Step 1, just start small. You don't need a fortune. Even $100 a month is enough to build the right habits. Step 2, secure your stuff. For crypto, that means getting it off the exchanges and into what's called cold storage, a physical wallet that's not online. For your metals, it means using secure, insured vaults. And finally, step 3, never stop learning. Join a community, read, listen. In a market that moves this fast, knowledge is, without a doubt, your single best asset. I just want to leave you with this final thought because it's so important. This whole strategy, this blueprint, it's not some get-rich-quick scheme. It's about understanding the new rules of the game and taking back control of your own financial future. It's about making sure you're not a victim of a system that is actively, purposefully devaluing your savings. So the only question left is, are you ready to build your blueprint?